Hello there, welcome back to the weekend. That was a little bit like a show band voice. Anyway, um, welcome back to the weekend video. All you guys, thanks so much for being with me during the week, and let's get into it and run through the markets quickly just to see where we stand and what the opportunities are and pitfalls on top of that. Okay, so we'll start with euro dollar, obviously, as usual, which should be a long one. Okay, so the stock market is declining again today. It looks most likely like a third wave extension that we're working on right now. But so far we've still only got 3 waves off the high, so that's still the let's say the most glaring negative at the moment, if you want to call it a negative. That we have a 3 wave pattern off the high, but we should extend lower and create a larger 5 wave. So that's what we'll be looking for. We did get a break of that previous 4th wave there over the last couple of days. So that was 25.20 or 25.250 or thereabouts. The alternate count shows a C wave with the recent high being a B wave. I'm working on the fact that the larger market did break to a new high. I'm working on the idea that in the Dow this could be a failed fifth, and we are heading lower into a new bear market. Okay, so let's get into the hourly chart. So far so good on this wave count. We've got a 3 wave high and now a kind of an expanding or extending 3rd wave lower. Today's decline broke out below the previous 3rd wave, so and we're hanging below there right now, so it's 24,933, so we're back below the 25,000 level again. And this decline, I would expect it to extend a little bit further. So early next week, I would be looking for the declines to extend, and let's say we push down towards the 24,460 level. So down to 24,460, we are reaching equality with wave 1. So, wave 1 here would be equal length to wave 3, which is what we're working on, wave 3 down. So this pattern right here is marking an extending wave 3. So wave 1, 2, wave 3 of 3, wave 4 of 3, and then wave 5 of 3. I'm looking for a break of that wave, that a minimum target of 24,460, and the ideal target would be down near 23,500. And that'd be where wave 3 would reach 162% of wave 1. So that's the kind of larger perspective at the moment. So it's a case of kind of day by day. So far so good. Let's keep the interim highs as resistance, and let's keep moving lower in this 3rd wave. So the interim high to watch from here would be at 25,222 level that we've been working on for the last while. And that also marks the wave 1 level there. I like that as well, that the fact that the previous wave 1 acted as resistance for the most recent wave 4. So let's keep moving lower, hopefully on Monday, especially if we finish on a low this evening in the States. We'll most likely push lower again on Monday. With minimum target for early next week at 24,460. So that's the outlook on the Dow. And here's gold, 4-hour chart in gold. Why won't you change? We're moving up off the recent lows. A pretty nice spike today. So I was talking during the week about the extent of the bear market in the metals right now. It's when you look at it like in a full cycle picture, we've been you could pretty much count the metals as being in a bear market for the last 8 years off the 2011 highs, and it is about time we started looking significantly higher. So we were looking at a possible 1-2 pattern here over the last few days, and so far that's working out with a breakout above that trend channel line there. So it looks like we have wave C and wave 2 complete. You could call this previous low here wave C of 2 also, depending on how you want to frame it. That could also be a failed fifth wave, or else wave 1 up, wave A or ABC, kind of large expanded flat, and now we're moving up into a third. So whichever way you splice that, it looks like we're moving up into an impulse wave higher. And here's the 1 hour chart. I'm calling this most recent low a failed fifth wave, but like I said a minute ago, you could call that most recent, that lower low at 1266 wave 2 also. So you could, let's call that the alternate wave 2, and the move off that low would be the beginning of wave 3. So get over there. The fact that this is 5 waves down kind of points more towards a failed fifth than an extended C wave, although you could look at it that way. It's kind of 50 6 of one, half a dozen of the other at this point. So we're back above 1300. We were looking for a break of 1300 in this possible third wave, and that came today. Wave 4 should early next week. I would like to see next week a break of 1324. That would really push the buttons. All right. So that's the previous B wave. That's forming the kind of significant resistance at this point. So for the moment, still looking at building a 5-wave pattern higher, and then a 3-wave corrective decline off that high. That'll be an impulse wave pointing to a larger trend change. Okay, so that cleans up the 9 markets. I hope you had a great week, and enjoy the weekend. It's an extended bank holiday weekend here in Ireland, so enjoy the sun or enjoy the rain as we have, and we'll catch you again on Monday evening. Thanks so much, guys. God bless. Bye-bye.